Hey traders, Jason here from Levitt Brothers. So in this video, I want to talk about the current state of the market. Okay, going back even a couple months, we know breadth had declined, a little bit of a warning, but the market kept going forward. Some leadership stocks started to fall off. A lot of good, solid, high-quality companies got crushed after earnings. Every once in a while, it's good to circle the wagons and check out what exactly is going on. Check out the index charts. Check out some breadth readings to see what's happening. Anecdotally, we know that the market is weakening. Okay, my number one indicator is just the quality of really good trading ideas. If I have really good trading ideas, then that tells me the market's in good shape. And if I don't have a lot of good trading ideas, that tells me something else. Also, the type of stocks that are on the trading list. So if I go back a month, 6 weeks, I had a lot of really good trading ideas, and most of them were tech stocks. Now I have less good trading ideas, and most of them are commodity type stocks, whether it be oil, different types of metals and stuff. There's almost no tech on my trading list right now as far as going on the long side. So that by itself is the strongest indicator I have. But in this video, I'm going to look at the indexes, and then I'm going to look at some breadth readings just to get a gauge of what's going on here. All right, first up, this is the S&P 500 monthly chart going back, to basically the beginning of 2016. You can see here's the COVID low right here. Really good rally to an all-time high. Came down, tested the 50-month moving average, moved up. This level here wasn't anything significant other than it matching the level here. Pulled back, tested the 21-month EMA, and then as you can see, we are on a 5-month win streak as the S&P has gone up and up and up. It's been a fantastic run off the late October low. You certainly can't complain about anything. We've had a lot of great trades. Index has done well. Trading ideas have been plentiful. Lots of opportunity to make money. So this looks really good. Okay, even if we got a pause here and we pulled back to a key moving average here, the blue one is the 10. Even if we got a pullback of a couple hundred points, even more than that, the strength and health of the overall market will remain in place. It will take a lot to reverse this chart. Okay, tops typically take time to form, at least a couple months. So this chart's in fantastic shape. Even if we do get a pullback for a month or two, it's still going to be in good shape. So whatever your diagnosis is for the near term, remember that longer term, the market's doing just fine. Okay, here's the weekly chart. Going back, this is the COVID low over here. So huge rally, huge cup and handle pattern that persisted over the course of, it depends on where you measure from, at least 2 years, maybe even 3 years. So you can see the cup and handle broke out, paused over here at the previous high at 4,800, and then has gone up and up and up. You can see lots of volume, pretty good volume bars, no real warnings. In the near term, we had a big candle 2 weeks ago on pretty decent volume, and then last week we had an inside candle over here on even stronger volume, but that stronger volume was mostly due to quad witching. So again, just like the monthly, this is in really good shape. You can see it's the light blue line here is the 8 EMA. It's been riding the 8 EMA up for a couple months. So look for that for support. If that gives way, then I'd expect a drop down to the 21 here, which would be nice. I mean, I'd actually like that. Give me a couple hundred points to the downside to let some of the charts pull back. Because when the S&P pulls back 5-6%, some growth stocks will pull back 15-20%. And guess what? We get a chance to buy some quality names that have some volatility at much lower prices. So don't fight a pullback. Okay, right now it's riding the 8 up. I'm looking for the 21 if that gives way. Zooming in one more time with the daily chart, it's been steady off the late October low over here. It's been riding the 21 up. The 21 is the orange line here. So you can see what typically happens is it'll ride the blue up, and then it'll drop to the orange. It'll ride the blue up, drop to the orange, find support at the blue, drop to the orange. And again, it mostly rides the 8 up, and then occasionally it'll drop and touch the 21. So right now, that's what I'm looking for on the downside. A little bit further move down to the orange line. If the orange line gives way, it'll be the first time we get a close. There was a little bit of a close right there. Besides that, it'll be the first time we close below the 21. since October. So that's what I'm looking for right now. As long as these moving averages stay in place, the market's in good shape. If the 21 gives way, then I'm looking for this space between the 21 and the 50 to get filled. If that happens, I'll be happy, okay? I think it's actually hard to trade a market that just goes up, 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 up. It's actually good to get some occasional pullbacks along the way. They set the stage for bigger gains going forward. All right, let's look at some breadth readings. All right, here is S&P 500 up top. Below is the Russell 3000 stocks above their 20-day moving average. Just want to point some things out here. So we had a break of support over here, and you can see the market trended lower. We had a break of support over here. The market simply moved sideways, and then it just kept plowing forward. Okay, so the market has done this, kept doing this in the face of much weaker readings over here. Okay, so that's definitely notable. It's definitely a divergence there. But we have here close, zooming in, we have a break of support here as this comes down. Right now, only 44% of stocks are above their 20-day moving average, so less than 50%. So we're definitely seeing some weakness here. Okay, again, this is Russell 3000 stocks above their 20-day moving average of 20 is not a high bar to get over. Market's been moving up, 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 and yet participation has been lukewarm. Participation has been lukewarm for like 2 months, and just now it seems to be breaking down. So it's something to keep note of. So here is the Russell 3000 stocks above their 50-day moving average. It's a similar situation. We got a break here, and the market moved down. We got a break up, market moved up. High number here. So if we break down there, it's not as big of a deal because, mathematically it's going to break eventually, and the market moves sideways. But then we got lower prints here that were basically straddling 50%, and the market just kept going up, 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 up. So to me, that's like negative pressure builds. The market is pressing up, it's going up, it's going up, and yet we only have 40 to 60% of stocks above their 50-day moving average. Eventually, that's going to give way. It could happen soon. It might happen in a week or two. We don't know. It could also break out to the upside here, but it's notable that these prints here have been so lukewarm compared to other periods where you tended to get, consistent prints like between, let me delete those. You see back here, steady prints between 60 and 80%, steady prints between 60 and 80%, and yet for the last 2 months, we've had these prints between 40 and 60%. So negative pressure building, it's notable. All right, one more in this category. This is the Russell 3000 stocks above their 200-day moving average. Looks good. Okay, we've had steady prints going back a couple months above 60%. This looks good to me. Okay, I don't see any warnings here. We're 1 or 2 bad days away from getting a print down here, so I get that. But for 2 months, we've had a steady number of stocks trading above their 200-day moving average. No major warnings here. The long term seems pretty good. It's the shorter term with the 20 and the 50 where there are warnings. All right, here is the S&P 500 up top versus the 1 month high-low. Okay, and what we get here is you get like a break of support here. You got one there, but immediately recovered. Then you got a negative divergence here. And then this broke support, and we got to move down. We got a positive divergence here, moved up. Then we had some really good prints over here, but then it broke down, and we got some sideways movement. And now we've had some lukewarm prints here, and we got a break of support at the end of last week. So a combination of like lukewarm prints, and I'm going to do the same thing I did with the last chart here, is that when the market's doing well, you get decent prints above zero, mostly above zero, really good prints mostly above zero, and then here we have more like lukewarm prints straddling zero. A lot more prints above zero than below, but you would think with the market doing this, you'd get a lot more prints above zero and you'd get higher prints above zero, but it hasn't happened. Okay, so on the surface with the indexes, the market's doing really well, but beneath the surface, there's like this internal negative pressure pulling on the market because we just haven't had any high prints here this year. All right, next one. This is the S&P 500 up top versus a 3-month high-low. So same as the last chart, except I'm backing up to 3 months. Similar situation here. We got a break of support. Market moves down. Lower low here, but less stocks. Higher low with the 3-month high low. We got a break of support here. Market moves sideways, and then once again we get market just pressing higher day after day after day, week after week, and we get very lukewarm prints over here. Steady, lukewarm prints. And then at the end of last week, I mean, you could draw a trend line in several different ways, so I'm not going to say this broke down. Certainly, even if you use like a really thin crayon there, you can't argue that that's really a breakdown yet. But certainly we're on the edge there. Okay, combination of lukewarm prints for a couple months, market pressing higher, a little bit of negative pressure building. Seems like it could be released at any time. At the very least, I'd look for some sideways movement. All right, next up is SP 500 versus the 52-week high-low. This one's a little bit better. Okay, market moves up, you get some decent prints here. Market moves up, you get some decent prints here. Yes, we got a breakdown over here, and yes, we got a breakdown here. But for the most part, these are pretty good, healthy prints. So, like the last set of charts, there are issues with the 1-month high-low and the 3-month high-low, but with the 52-week high-low, we're actually getting some good prints. And there are no major warnings. Maybe in the near term you could draw a trend line here and say, hey, this is in the process of breaking down. But I still look at this as being range bound and giving us pretty good prints. So it seems like there's problems in the shorter term, but the longer term, whether you're talking about the 52-week high-low or stocks above the 200-day moving average, we actually we still have pretty good readings there. All right, this is the SP 500 up top. In the middle is the 10 EMA of advancing stocks versus total stocks, and the bottom is the 50-day moving average of advancing stocks versus total stocks. So this is just going to be a gauge of how many stocks are advancing on any given day, and if the market moves up, you'd expect advancers to beat decliners, and the market moves down, you expect the opposite. So if you get a market that moves up and advancers aren't really holding their own weight, then it's a little bit of a warning. What I see here is, first of all, going in the past, you can see where you get a high print here, and then we get sideways movement that eventually moves down, and then the market kind of corrects. You can see this playing out a lot. You get a high print here, then some sideways movement at a healthy level, then it breaks down, and over here, then we get some sideways movement. So this kind of repeats. We get some high print here, more high prints, and then sideways movement, and this moves sideways. But we didn't get a full-blown move down. We got to move down here, sideways movement, but then we got a good recovery. And like these prints are at a pretty good level. They're not too high, not too low. They're healthy. They support the market's movement. No real warnings, except now we're starting to, we got a break last Thursday, and then, Friday was just kind of a dead day. Not a dead day with the market, but with this indicator, it didn't move much. So I think it could be rolling over here, but it could also just be just a continuation of the sideways movement. And then if I look down here at the 50, we get some, we've had a couple months of just sideways movement here too. So no real, no extreme conclusions can be drawn here. I see in indicators, whether you look back 10 days or 50 days, that the indicator is just moving sideways. If they break down, sure, we're going to get probably a break here. At the very least, we'll get some sideways movement. At the most, we'll get an actual, mini downtrend. But for now, the advancers versus total are actually in pretty good shape. They're moving sideways. They could be breaking it now, but hasn't happened yet. All right, so that's what I got for you. Just a quick review. The monthly chart looks fantastic. The weekly chart, the daily chart, all the S&P looks really, really good. Okay, there's uptrends on all time frames. Support is in place with moving averages. If those moving averages give way, then there are lower moving averages that are likely to act as support. Okay, the market's in really good shape overall. And I would fully expect that if we did get a pullback, like the pullback would get bought. Looking at the indicators, we've had negative pressure building for, you can actually say a couple months, because some of these breadth readings have declined back in January, and they've been moving sideways. So I'd say near term, the market is under pressure, but overall the market is doing just fine. So if I were to I'm not going to predict what comes next, but it would make sense for us to have a little bit of weakness for a couple weeks or so, get a pullback. 5% pullback is pretty reasonable, but the longer term charts tell us that the market is really healthy overall. So whatever pullback happens, I would expect that to get bought up, and we'd have a continuation of the uptrend. All right, hope you got something out of this, and we'll see you next time.